Hello and welcome. My name is Joe O'Mara. I'm the head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined today by Ali Ben Lmadani. Ali is the CEO of ABL Aviation. He is joining us for the purposes of our 2022 Aviation Leaders Report. I should say we're recording this 3 days before Christmas. Ali, thanks again for joining us, for your always interesting views. Can I ask you, before we maybe begin to the meat of discussions, do you want to tell our watchers a little bit around ABL?
Of course. Well, first of all, thank you, Joe, and thank you, Victoria. And sorry that I don't have such a nice background of Joe, it's Christmas season, but thank you so much for having me, guys, as always. ABL Aviation, we did set it up in 2014. We have 5 offices worldwide. I'm based now in the Dublin office. I used to be based in the New York office. I think very soon I'm going to be basing myself back to the New York office. We have a Hong Kong platform, which we're keeping for now. We have a big Casablanca office, that is our back office. And we have, of course, the Dublin office and the Dubai office. We do technical in-house. We go from a small company of 3 people in 2014 to about 40 people by now, by 2021. We are going to add 2 more offices, I believe, next year, which will be a Paris office, which will manage other businesses and aviation, and which will be a Tokyo office. We did 2 joint ventures in the last few years. One of them in Japan, which allows us to access the JOL and JOLCO markets, which we are very happy. We have amazing partners in Japan. Our joint venture went very well. And I hope, especially during COVID, that we're very supportive to our investors. We protected our investors during COVID. And our Japanese investors, I think, were very happy that we had the technical team to support them during COVID. And that's meant a lot to them and meant a lot to us, because partnership should be when the hard times come that we need to support our partners. And that's showed during COVID, our strength relationship, and our relationship strengthened in Japan during COVID because of the hard times with some airlines. We just did a joint venture in the US, which is a different kind of partnership, and that is going to do more midlife and opportunities with institutional investors in the US market. We're going to look more and more into the US market as well, because we believe that there's more and more investors that will come in the next few months or few years from the US institutional investors to invest in aircraft as an asset class, separate to real estate and other asset class where they used to invest before. That's in summary what ABL Aviation and the team, the amazing team as ABL Aviation is working on.
Obviously a lot going on. And if we maybe think about the market generally, we've obviously, we're into, nearly hard to believe, we're nearly 2 years into the dislocation that's been there. And we've seen the recovery stop a little, start again. But on the opportunity side, you talk to some of the ones that you're looking at the moment, where are you identifying those opportunities with airlines? Is it geographic based? Is it particularly metal based? What opportunities are you seeing out there at the moment?
Well, the market did rebound very quickly during COVID. Like it had a few months of hard time, and after it's come back, it's very competitive markets. We see, of course, some opportunities directly with airlines. We did deals with Delta Airlines, for example, this year. We did deals with Lufthansa Airlines. So tier 1 airlines, we saw some good opportunities. Of course, it's very competitive. But we believe that in the future, we'll see a lot of sell and leaseback and direct innovative structures with airlines directly. We also believe that in the secondary market, we will see some opportunities, as in the secondary market, you have some good opportunities to be done, because for the last 18 months, most of the lessors and asset managers didn't trade any of their assets, or very few assets were being traded. So all of them are going to have to keep the fleet age very young. And therefore, we believe that in the next few months, there will be lots of opportunities with other lessors, but still there's lots of equity in the market, and the market is going to be still very competitive. We see some of the lease rental factors going lower and lower because of the amounts of cash available. And even the airlines are having a lot of cash from the government's cash they receive, but also from the fact that they manage the cash very well. A lot of the airlines are very cash rich, and it's harder to do deals with them right now because they have a lot of cash available to them.
See, on that trading environment piece, and I totally take your point. We have a model here where large scale, lessors, whether that's order book driven or large scale sale and leaseback, will need to get their fleet age down. As you say, it stayed static for about 2 years. Have you seen that trading market start to open up again? It was obviously very, very closed, I'd say 20, early 21. Your thoughts on, often we'd be chatting about X portfolio, Y portfolio in the market. Have you seen that start to come back a little bit in recent months?
So yes, during the months of November and December 2021, we saw more and more portfolio coming into the market. We see some portfolios that we like, which is interesting because the portfolios that are coming into market are with very good names. Like if we look at before COVID, it was a mix of good names and bad names. We see some portfolios with very good names that are coming into the market, where maybe people are seeing opportunities to trade at high prices before there is an overflooding of lots of aircraft coming into market, so that the lessors will have to keep the fleets of the fleets with younger age for investment grade purposes, etc. So we will see, I think, an overflooding of portfolios starting in January. But we already saw some portfolio coming in November and December of this year, 2021, and we see a lot more, I believe, coming starting Q1 and Q2. Most of the lessors and asset managers didn't trade during the last 18 months. So there will be a lot of trading, I believe, happening Q1, Q2, 2022, and the portfolios are already starting to come. The portfolios are good, but at the same time, the purchase prices are extremely competitive, and we're at levels that are even higher than what we were pre-COVID in 2019, which is an interesting market. That shows you that there's lots of liquidity and people are fighting for good deals.
Yeah, I think that's interesting. And yeah, obviously at the back of this, you've got Aircraft GCAS and, that transaction closing, probably a requirement on the Aircraft side to divest to get back to that debt to equity ratio that they've committed to on the rating agency side. So I fully agree with you. Right? I think there's going to be a bunch of portfolios and more coming. Your point, which you mentioned a couple of times, the competitive nature of pricing. So anecdotally, it seems, if you were out writing sale and lease back, in from Q2 on in 2020, there was probably a COVID bounce on pricing related to risk. Seems to have totally eroded. As you say, the market's really, really tight. That seems to marry with what you're talking about. And I'm just wondering, as you're managing returns, the things you're thinking about and looking at transactions, lease rate factor included, what are the other factors that are kind of driving, obviously, are driving the appetite for transactions and kind of maintaining and protecting returns?
Well, to your point, we are at levels that are almost lower than before COVID. The market is extremely competitive. And during COVID, we had a period of time that you had opportunities to do yields that were higher or lease rental factor that were higher than usually we have. You have to be innovative. So you have to find solutions for airlines that are not only about cash. Everybody has cash. Everybody has money to deploy. You have to look at opportunities where you can, for example, and that's a good thing about ABL Aviation, where we can do new assets and midlife assets, where you can mix for an airline a solution of, you find a solution for the midlife assets they have, and at the same time, you find a solution for the new assets they have. And when you combine these two as a solution for an airline, that's worth a lot more than cash or lease rental factors. Just competing on the price and the race to the bottom doesn't help any of us. Everybody have cash, we can race to the bottom and we're going to get those lease rental factors going lower and lower. That's not what we try to compete on. We try to compete on added value, on innovative of structures, but also to help an airline on what they have already on their fleets and what is coming to their fleets, and work that together. Say, okay, we can do this on the midlife assets you have, we can do this on the new assets you have, and mine those two and finding solutions and preparing ourselves the solutions to the airlines. That's where the airlines see value coming from ABL Aviation. If it's only to give them a number, everybody can give a number. I think especially during COVID, airlines are looking more for solutions that are put together in one box and say, okay, here's the solution for your fleets. I know that you have some issues on your midlife. I know that you have some new deliveries coming. How about if I combine a solution for both of them? That's one example of a solution that we can offer to airlines to add value. Competing only on numbers don't make sense. You have to work very closely to airlines. You have to work with airlines that trust you and that know that you're going to deliver and be there. COVID showed us that because at the beginning of COVID, if you remember, there was lots of people that backed off from deals. We didn't back off from any of our deals that we committed to. If we committed to a deal, we did it during COVID. And those airlines, I believe, remembered us. That's the first point. We were able to develop new relationship with some names such as I said, Delta, Lufthansa, and other names, where we were able to develop a relationship based on trust, where they knew that we'll be there and that we'll deliver all the way. And if we say something, even as a smaller platform, as you mentioned, GCAS or AirCap, of course, we are smaller than a GCAS or AirCap, we were able to deliver for them. And I think when nobody was doing deals, And I think that's created some trust between us and the airlines where they know that we can execute. And that was very important during COVID for ABL Aviation as a younger company set up in 2014 to develop those kind of execution and make sure that it's quick, make sure that we are a small, nimble company, that we can go very fast. And during COVID time, that was very important for them.
But it's interesting the point you make there, because we have seen that theme, that deepening of relationships between lessors and airlines as they become, as you say, more partners, in helping managing this crisis. And therefore, when you open those relationships a little bit more, you have to think that feeds in on the opportunity side. You mentioned the liquidity and capital that's out there. Can I get your thoughts on the current aviation debt market? So, but both in the context of maybe the traditional banks and maybe some of the or the alternative lenders that have entered the space probably in the last year or so. We clearly had a retrenchment, like a lot of things, right, coming out of March last year. Your thoughts on how that market has opened up and where it currently sits?
Well, for a while during COVID, there was no commercial debt. I don't know if you remember, but 2020, 2021, there was almost no commercial debt available. The debt was very, very scarce. And that's why you saw a lot of alternative lenders coming into the market. We saw a lot of alternative lenders coming. Of course, the margin of the alternative lender is a little bit higher, but those partners were very present, such as PK and other guys like that were very active during the COVID period. We also saw a lot of covered financing, AFIC, AFS, that is owned by ACG, Highfly, were more and more active. Baltazar as well were more and more active because they needed to have covered debt to have some deals being done. And those players saw good opportunity in COVID. My feeling is maybe that window is getting closed more and more as commercial debt is coming back to the markets for the good names. But they will still have a place to play. There will be still a place for alternative lenders because of the speed of the execution, because of how it's structured from one side. There will always be, in my view, a place for covered debt because it allows you to enhance the credits of a borrower by adding a covered financing into it, which we did a lot. Like we did the first AFIC JOLCO, we did the first AFS JOLCO. We're looking at Baltazar and XM and other structures like that. But there will be always a place for that because it's enhanced the credits of the borrower.
Can I ask you, another element of the debt we've seen is capital markets. Obviously, the IG-rated lessors have tapped that unsecured market in just a phenomenal way over the last, probably since June of last year, and with $11 billion in H1, the AirCap $22 billion. But what we've also seen in the capital market side is the return of ABS. So a really important channel in the secondary market, $10 million of assets in 19, tracking that to 20 in Q1, and obviously it stopped. And people are probably expecting a very significant pause, but it's come back quicker than anyone would have thought. Your thoughts on where that market currently sits? We've seen a dozen deals completed in 21, mostly on the debt side, right? So it's a lesson probably on the E-note piece. But your thoughts on how quickly that market has come back and where you think it might go in the next 12 months?
So I was at ABS East last week in Miami, and there's a lot of appetite because the asset class of aircraft is being more and more familiar to the investors. That's the good thing about it. The E-notes, as you said, don't trade, as of last year, didn't trade at all, or on a very, very big discount. We will see, I think, more ABSs happening in 2022. The main thing about the ABS markets, and we haven't done ABS yet, but that's why to be for full disclosure. But the main thing, in my view, about the ABS market should be seen as a financing tool, not as an exit strategy. It's just another option to finance an aircraft. It just, instead of going to the commercial or the WETC or any of the lessor WETC or any of the capital markets, you have ABS as well. Some of the investors think of it as an exit strategy. I believe, that's our personal view at ABL, that it should be seen as an alternative mode of financing the aircraft. It can be, it's a debt product, and it should always be seen as a debt product, not as an exit strategy. And once you look at the ABS markets as a debt product, then it becomes a very efficient debt product that you can use. Of course, the equity on the E-note side is a little bit harder to trade, as we saw in the past. So holding the equity and using the ABS as one of the multiple sources of financing you have, it's perfect. Using it as an exit strategy or instead of trading or instead of having other structures, I don't agree with that. And that's my personal view, not my company view, but we should look at it as one of the source of financing.
Yeah, and I totally get that as a logical piece. And you're kind of, it'll be interesting to see how it develops out. We've seen probably some of the traditional big serial issuers come back, but those arrangers, you know, a bit of like the likes of yourselves, a little bit around that kind of asset manager piece, as you say, it's a weapon in your arsenal to build out that portfolio, enhance a partnership you might have on the equity side. Can I ask you just around maybe probably a bigger picture piece? We have seen some level of consolidation over the course of 21, supersized transaction. We're aware of a couple other transactions that are probably, you know, being gossiped about at the moment, but let's assume for a minute that they might happen. That's probably a reasonable amount of consolidation we've seen at the top level. What are your thoughts over how consolidation will move over the next kind of, again, 12, 24 months? Do you think we see fewer large lessors, or do we still see just continuing increase of newer platforms coming, and that concentration, which is broken out very significantly over the last decade, continues to be broken out in that way?
That's a very good point. So 2 points on that. The first one is we have to ask ourselves, why do we have consolidation? And my personal view is because it's very hard right now to acquire assets directly in the market. So acquiring a platform allows you to go bigger a lot quicker. And therefore, it's maybe you are getting a discount versus going and originating those deals yourself from airlines, etc., which is a good play. It was done a few times with few of our friends, and it's a very, very smart structure to do it. To your second question, do you think that there will be a few big lessors? Yes. Is it good or bad? I don't know. But I believe that when you become too big, and that's our personal view, it's harder to be closer to all the airlines. You cannot have the best friend relationship with all the airlines when you're becoming too big. You cannot have the CFO, the CCO, and the CEO be very close to all those airlines, which is a very hard dynamic to keep. So my view is that, yes, we're going to have few very big lessors that are consolidating a lot of the smaller asset managers or lessors that were very, very smart as what they did in the last few years. And then you are going to have maybe a little bit smaller asset managers that will be focusing on the relationship with the airlines and mainly the relationship with the investors. Because some of those bigger lessors only own their assets and manage the assets. They don't want third-party management. Our job at ABL Aviation is to do third-party management, is we manage assets for investors. We need to make sure that we protect our investors. We need to make sure that we keep our investors happy. And we need to make sure that we are very, very close to our investors, as many as possible are close to us. That's the structure that we developed as ABL Aviation, is to manage assets for investors, third-party ones, which I believe bigger platforms will not want to do, will not be interested in doing, because it's too much work for them instead of focusing on their book. They already have enough problem with their book. Why would they do third-party? And if they do it, my view is going to be, first of all, conflicts of interest. Second of all, I believe it will be sloppy, because you cannot manage a big book that is your own, and in addition to that, manage several third-party accounts that you are going to try to protect the interests. Our job, and we showed it during COVID with our investors, during hard times, is protect our investors, make sure that our investors' returns are protected, make sure that what we tell them we're going to do, we do it, and not have a conflict with our own book that we need to manage at the same time.
Can I ask you on that investor point, the types of investors you're seeing show interest in the space, right? So you've talked to Japanese capital, which has loved aviation for a very long period of time. You've joint venture with US private equity, which again has a long-standing relationship with aviation. Do you see the capital that's coming in? Is it the same type of capital that we saw pre-COVID? So again, different players and changes that are there, but do you still see it being the same type of US private equity, Japanese capital? Chinese is probably retrenched a little bit. Your thoughts around the capital that's coming at the space, and has that materially changed in any way in the post-COVID environment?
I will speak about COVID, what's happened with what I know, which is the Japanese capital and the US capital. On the Japanese capital, some Japanese investors were very hurt by some deals. And we had, for our investors at least, we had to spend a lot of time and be there to explain what's going on and to protect all the deals we did and to make sure that all the deals during COVID made profits, which was extremely hard. And we had to spend a lot of time with our Japanese partners because, as you know, in Japan, it's a multi-generation deal when you have a partnership. They're your partners, they're your family. You have to make sure that you are there for them day and night, and you have to make sure that you protect the interest, whatever it takes you, because that's how partnership are done in Japan. This is a family thing. You cannot just back off and say, well, this is not my deal, nothing to do with me, it's tough luck. No, it's you are my partner. I will help you as much as I can, and I will find solutions. And that's what we did during COVID. And I think our partners in Japan appreciated that. Some of the Japanese investors that's once with us had some hard time, but most of the asset managers that have technical platform and that manage assets were good to explain to the investors. You had, of course, some originators, especially on the JOLCO markets, that don't have technical platforms that had a hard time during COVID and weren't there for the investors. And we saw it so many times, and that's upsets a lot of Japanese investors. So we will have to fix that. Us, the platforms with technical, you know, the BBAM of this world, the FPG of this world, the Oryx of this world, that have the SMBC, of course, that have big platforms with technical, we will have to fix that in the future. All those relationships that will kind of burned a little bit. That's our job, to make sure that we build that trust again, that some of the originators did destroy. That's on the Japan side, which is very important. Japanese, as you know, are long-term partnership, and they will always remember if you did good by them or bad by them. So you always need to be very, very careful about how you do that. And COVID accelerated a lot of changes, I think, that will happen in the Japan market. On the US part, we saw at the beginning of COVID, a lot of US investors come in looking at, oh, aviation is distressed, we're going to make 20%, 30% return, let's take advantage of that. And some of those investors started to take advantage of the Japanese investors, which was very, very hard for us to protect the Japanese investors on that, because you had a lot of venture capital funds that were coming after the Japanese investors, and our job was to protect them from those vulture funds. That was the very new kind of investors that we saw coming into this market, trying to make very high double-digit returns, and from some of them were on Japanese investments, and we had to protect the Japanese investors on that. So those are the new kind of equity that we saw. Then you have the second new equity that we saw, that is, okay, aviation is an interesting class. We don't see enough return in other asset classes with COVID. Maybe let's look at that. And those are, like our partners in the US, are more reasonable people. They say, okay, we know that we cannot make 30, 40% on aviation. We're not stupid. We know it doesn't exist. Let's look at reasonable return. Let's look at long-term partnership, and we're in this for the long term. We're not going to be in and out just in COVID. So those are the two kind of US, European investors that came during COVID. The first ones were 30%, 40%. We're going in, we're going to destroy the deals in aviation. We're getting as much as we can. And the second ones are, okay, let's get in, let's get a partner, let's sign an asset manager like ABL Aviation. Let's have a long-term partnership with them and be calm and wait for the time. My view on the long-term people are going to be there. The short-term people didn't understand how aviation works. We're a business of relationships. We're a business, if you burn a bridge, people will remember. And if you burn a bridge with one of the airlines, everybody in the community will know it. And that's why those first type of investors don't know it. And if they're in and out of this business trying to make a quick buck, this is not how aviation works.
Yeah, and I think you're totally echo that, right? In that what we saw, the vultures circling, right, going back to probably middle last year. To be honest, the deals weren't there for them. You know, the stress that was held, and as you say, the stickiness of investors that come into this space has always been very, very impressive, and those that have come at it have rarely left it. Can I ask you a link point to investors, which is, you know, our existential threat is around climate change as a wider community, but also it's going to be a huge impact on aviation. The discussions you're having, either on the debt side or on the investor side, how impactful are you finding the ESG agenda as of now? I think we can all accept that it's going to come, and it's going to be even in more increased importance in the coming years. But curious as to how quickly ESG comes up when you're looking on the debt side or the investor side, if at all at the moment.
So 2 points. Yeah, we see it. It's becoming everybody is speaking about it. First of all, I like the fact that you use the word ESG, because everybody focus on the climate. Nobody focus on social governance. Everybody will focus only on environmental. We should focus as well on social and governance, like coming from Morocco, social is something that is very, very important to myself, but also government policies. So that's something that we should focus on as well, not only the environment by itself. The environment by itself, of course, is very important, but we have to focus on the social impacts of what we're doing, and we have to, and which is amazing. Like, as you know, aviation is one of the, I like to call it a freedom tool that every government has, because it allows you to have, if you look at AirAsia, Lion Air, it allows to have people moving that weren't able to move before. And this allows economical development in nations that couldn't have it before, if you don't have those low-cost carriers in nations that never had aviation before. So the impact of aviation on some social government places, like if you look at Malaysia and other places like that, is huge. It allows people to move. It allows people to have economical freedom. It allows people to have freedom. I love aviation because for me, it's freedom. It allows you to move all over the world. It allows you to have a cheap ticket to go and make a better future for yourself. On the environmental part, yes, it is important, but what we don't want to have, which in my view happened in the past, we don't want to have fake environmental things. We don't want to have fake green bonds. If we are going to do it, let's do it seriously. Let's do it with, and we are doing it, but let's do it with the real impact. Let's not just do it to tick a box. If it's just to tick a box, like, we're just kidding ourselves, and people are not stupid. They will know what we're doing. Once you do it not to tick a box. Do it, okay, we're doing, for example, we're doing trees in Morocco, and that's something that we're not doing to tick a box because we don't really care about it. It's just where I'm from, cedar trees are dying. I like to plant cedar trees, as simple as that, because I like doing that. I'm not looking for any debt margin or any impact on my economics on it. This is something that I'm doing because I like doing it. And I think that will have more impacts for all of us as lessors and asset managers than just doing things to tick boxes and to make it look good on paper or on PR. That's not what we're looking for.
And just in closing, Ali, as we've come through what we expect and hope will be two of the hardest years aviation has ever seen, what are your optimism levels like as you look out into 2022?
Well, that's a very good point you just said, Joe. So I'm going to say a comment based on that. And Joe, you're on a lot of panels with me. And we're both, I think we're the same age, we're both very young people. And for years, I remember being on panels, and young people like us, well, we're not young anymore, we used to be, but young people like us used to have comments from all the asset managers, lessors, CFOs, CCOs, saying that we never saw any bad times. We never saw any Gulf War. We never saw any bad time in aviation because they all saw the bad time in aviation. So Gulf War, it was Middle East not flying. 9/11, it was the US not flying. Let's say SARS, if we're younger, SARS was Asia not flying. But you and I, as young generation, well, we're not young anymore, but as younger generation in this industry, we are the first ones to see all the flights stopped. Like the other people never saw that. Like they can say whatever they want. They can say that they managed the bad situations. This was the worst situation that's ever happened for a century. We at ABL Aviation, and you, of course, at KPMG, and a few other people were able to manage this perfectly. We were able to manage this situation, manage our investors, make sure that everything was good, manage with the airlines to make sure that we weren't hard with them and that we find solutions with them. So what we'll say for 2022, we will hope that in the future, when a younger generation come, we will not tell them, oh, you never saw hard time, because we'll just tell them, look, you are going to see hard times. And I'm sure you are going to do good on it. And you're going to deliver on it. And that will be my hope in 2022 is us as the younger generation, we keep on doing what we're doing, which we're good at. And we will keep on taking advice from the older generation in our industry. But we don't have to listen. We just will take advice and do what we believe is right. And maybe it's different than the older generation, but they will have to accept that we are going to think differently and that we're going to do things differently. And maybe they're not going to be happy with it, but they will have to accept it.
Ali, on that optimistic note, and I, without question, in 15 years, will be telling young people that they never had it so easy. I'd like to thank you for your time and insights today, as always, and wish you and ABL a very, very successful 2022. Thanks, Ali.
Thank you so much, Joe. Thank you, Victoria. Merry Christmas, happy holidays, and thank you so much for having me as always.